It's weird doing this in front of people. Hey, what's up? Hello, everyone, and welcome back to another episode of SimplyPodLogical, a Simply Logical podcast.
Hello.
Thank you for joining us this Taco Tuesday. We've got a guest today. We teased this a long time ago that we were going to bring on a financial advisor and take questions from the audience. We've finally done that. Everyone say hello to Derek, a financial advisor. Maybe, let's just do like a little quick, like, what does that actually mean? We've known you a long time. What do you do like day to day? Like, what is your background that makes you a financial advisor?
Who are you?
Who am I?
Yeah.
Well, it all started. So I am actually a portfolio manager is my official title, and I manage wealth for people. Here at a Canadian-based independent firm. My background is in finance. I have an undergrad and a graduate degree in finance. I am a certified financial planner and a chartered financial analyst.
So you have a lot of letters after.
I have a lot of letters after my name.
Like how many letters?
I should count, but
is it CPA, CFA,
CFA, CFP,
CFP.
and yeah.
Okay.
Yeah, there could be some more, but
I'm a CR.
Yeah.
That's my Cristine.
Oh, that's okay.
That's brilliant. Okay. So I know a lot of people listening to this are going to be American. I guess we should be clear that those designations are Canadian, I guess, technically.
Technically, so the CFA, Chartered Financial Analyst, is actually a global designation. So it's the same. So in Canada, I'd write the same 3 exams as somebody in India or US or wherever. Certified Financial Planner is actually, it's also a global gold standard. Each jurisdiction has its own. They meet the same global standard, but in Canada, our tax rules, our estate rules, that kind of stuff's very different than the US. So you'd have a CFP that's specific to Canada, CFP specific to US or other jurisdictions. But yeah.
Okay. And then the last thing I'll just say off the top is if there's a disclaimer that needs to be given here that, if we were to ever have a lawyer on, I would say something like, the lawyer is not giving you true legal advice. Similarly here, we're having sort of like an informal general conversation about investing, saving, what people maybe should do with their money, but you are not their financial advisor. A cat just jumped at me.
This is not financial advice.
Is that a good enough disclaimer?
I think that's a good enough disclaimer. Yeah.
It's not personal financial advice to an individual out there.
Anything we talk about is very general, and everything could be applied.
And will not be used against you.
All right, let's just hop into questions then.
All right.
First one from Vilma Paints. How the fuck do I save money?
I thought you said these questions would be easy.
Solve all my problems.
You're a financial expert. How the fuck do people save money?
Well, I guess the best advice probably is to start small. I mean, it'd be like anything, right? If you're starting a new exercise regimen, trying to get healthy, I think your financial health is very similar. Start small. Put 5, 10, 15, $20 away at a time. Maybe it's one less coffee or one less eating out a month, something like that.
Put it away where?
I can't give specific financial advice.
No, but like in a bank account?
In
like
my mattress.
Do you just save it at home in your piggy bank, or do you intentionally kind of put it in a second bank account that you're not using every day?
Well, that's a good point. I mean, it's going to be very dependent on you and your own personal situation, because it depends if you're going to be more long-term with it, and maybe you're going to look at investing it long-term. Maybe you want to put it more into retirement savings, or maybe if you're just starting out, it could be as simple as just putting it into a separate savings account. Sometimes if we take it out of our checkings and put it into our savings account, just that alone will maybe keep us from spending it.
I've always done that. I've always had a checking and a saving ever since I was 16. And I kind of used it for those purposes. Yeah. I don't know why it's called checking anymore. Like, who writes checks?
Well, I feel like when we were young, there were ways of just parking money with a bank that actually got you a decent interest rate.
It's true.
Like, there were short-term GICs where you could get, do you remember, maybe 4%?
I got 5% on a 5-year GIC when I was 16 years old.
So just to explain that to people, because this will sound totally foreign to a young person now. You used to be able to just give your money to a bank, say you can hold on to this for the next year, and you were guaranteed to get a return of 5% of the money you let them hold for a year.
Risk-free, essentially. Yeah.
Yeah. Whereas today, there's not really I've heard you should have an emergency fund on hand. Is that advice you generally give people?
Absolutely.
Okay.
The general rule of thumb is 3 to 6 months of your expenses.
Okay. So it
anywhere in
completely
that range.
varies in what your monthly expenses are.
So it's very dependent to you, whatever you would kind of need to manage 3 to 6 months if an emergency happened or, out of work or something.
Okay.
It's kind of, and very short term. So you'd want to put it in something like a savings account or something very secure.
Exactly. There's nowhere you can put that now on such a short-term basis if you need it liquid that will actually get you any sort of return on it.
Unless you consider like 0.001%. A big return, then
Sure.
You're correct. That's right.
Okay.
Yeah.
Let's move on to a little more specific question. How do I start taking care of my financial debt? And how do I stop spending all of my money, my paycheck, as soon as I get it?
Okay, well, for financial debt, I think probably the best way, first thing you need to do is kind of maybe figure out why you're in debt. I mean, and not to say that debt's bad and
Sure.
But you can't really start taking care of your debt if you're continually adding to it, right? If you've got credit card debt or whatever, maybe you need to budget, maybe you need to start cutting back on a few things. And then you want to start kind of attacking the debt. One common strategy is what's called a debt snowball. Have you ever heard of that? Debt snowball? You should know what that is.
You
For
consolidate
Canadians.
all your debt into one.
Snowball
Well, that's
in the
separate.
cold
Yeah, no.
outside?
So basically, what
You build an igloo.
what you do? Yeah, exactly. What do you do?
You store all your money
Put all
in
your
there.
money in the
No.
igloo.
That's
What's a
exactly
debt
it.
snowball?
A debt snowball. I don't even know maybe why they call it that. But you take all of your debt. You look at what all your different debts are, and you might have a credit card debt. You might have
Student debt.
Am I allowed to talk with my hands? Is that all?
Yeah,
Yeah,
sure.
just don't hit me in the face. Just don't spill the tea.
My wife's gonna watch this and be like, "You talk with your hands so much."
So do I.
Okay, good. I lost where I was, but no.
your
Basically,
snowball,
you look at what all your debts are, and you're going to have credit card debt, student loan, line of credit, whatever. Each one's going to have a very different interest rate.
Sure.
So what you want to do is you want to kind of see what you have to put towards all your debt, and you want to funnel as much as you can to the highest interest debt first. Okay. You make the minimum payments on the other stuff, and you put all of your excess money onto the high interest debt. Get that paid off first, then you go to the next highest, and then the next highest. And that's a way to kind of do it. The other one you mentioned, a consolidation loan. It's not always an option for everybody.
What's that mean?
So basically, if you have, credit card debt, student loan, line of credit, something, all this stuff, car loan, consolidation loan would be where you'd go to a bank and say, hey, listen, can we take all of this debt that's, different interest rates, maybe, different payments, wrap it all into one loan with a set term, a set interest rate, set payment, usually at a lower rate, hopefully, than especially the high interest stuff like credit cards and stuff.
I think it's mostly like it helps people simplify their picture of repaying it.
The challenge too,
Got
right?
it.
With a credit card or even with a line of credit, that's kind of like open credit, they call it. Like you just have to make the minimum payments. You're just paying the interest. And in a case of a credit card, like your minimum payment doesn't even cover all. It doesn't even cover all the interest, to be honest, right?
Same with most student debts, right? Like there's usually a repayment plan, and it says like 2 years after graduation, here's what you're expected to give monthly. So I think at least for student debt, I'm familiar with they kind of structure it for you unless you choose to pay down more.
And some of those have been like even deferred now in some countries.
I think
anyway.
so. Yeah.
So because like I guess one important thing to note here is like there's like record levels of debt held by Canadians right now. That's because sometimes it's smart to borrow money.
It can be.
I guess, how do I put this? A lot of people have a lot of debt in their homes.
Mortgages.
Yes.
If you have a mortgage, you have debt.
Yeah.
And with what rates are for mortgages right now, it makes sense for you to have a larger mortgage so you have more access. Like, but I guess I want to. Do you ever have people coming to you saying like, "Hey, I could take all this debt out of my home. I could take money out of my home, and I can like spend it. I can invest in stocks and try to make more money in investments than I."
Technically, if you have a mortgage at 1.5 or 1.6%, technically, if you take all that equity out of your home and put it in the market, and you think you can earn consistently more than that, then technically that works. Very risky. It's called leveraged investing, and definitely you have to have the right kind of risk appetite to do that and to be in the right financial situation. I wouldn't recommend it necessarily because you're taking something like your home, which is kind of steady growth, and your home where you live, and you're putting it into something like the stock market, which, hey, it can be great. It can be pretty scary and terrible too, right?
Speaking of risk appetite, that is an important thing here. If anyone is in the position to get a financial advisor, I think it's normal to do a sort of assessment of your risk tolerance, right? So that's something you would do with a client, for example.
Yeah, that's usually one of the first things. It's really starting to discuss risk. And if you do meet with a so-called financial advisor who doesn't first start talking to you about kind of your risk and your goals and objectives, then that's not a good sign.
It's a red flag.
It's a red flag. Absolutely. Super important.
Okay. And then just quickly on the second part of this question again, it's how do I not live paycheck to paycheck? I guess I want to be a little sensitive to the fact that some people just to survive are living paycheck to paycheck.
That's just,
But if it's like about finding little ways, or I guess I used to hear something like there's a certain percentage of your paycheck you should put into savings and then like pretend like you never even got it sort of thing.
Yeah.
Those rules, is that kind of arbitrary?
It varies. Like you can't, it depends on your expenses, right? If you're a student living at home and your family pays for you to live and eat, then it's a lot easier to put like half your paycheck away and just
so there's
hide
like
it.
no fixed rule here, right?
There's a few rules of thumbs for sure, but in this case with this question, I think it's the idea, like you kind of said, like pay yourself first. I think you even use that term, and that's exactly what it is, because I think most people, you have cash in your pocket, kind of you want to spend it. Same thing, you have cash in your bank account, you get your paycheck, it's easy to start spending. So what you can do, and we kind of talked about this earlier even, is right when your paycheck comes in, have some of that go out to a savings. Even if it's just a savings account, a separate account that's not on your debit card or, whatever, not easily accessible, then you can, it's out of sight, out of mind. So it's like forced savings. And you could, if in Canada, you could put it in a TFSA or an RSP, or... Yeah.
It's the psychology of just parking it elsewhere so you don't see it on the day-to-day. Then that makes it easier to not touch it.
That's exactly it.
I think it's hard to decide what that amount of money is, but that's not something someone else can tell you.
No.
Without knowing your full picture, I guess.
I mean, especially in this day and age, housing is getting more and more expensive, and, cost of living is continuing to go up now too. So it's not easy. It's easy to say, hey, you should save X amount, but it's not always easy. Is
it just harder in general to save money right now compared to like 15, 20 years ago?
I think so, because if you think of the rise of, and this is very jurisdictional, but even in Canada here, especially in our like rural or more urban areas, bigger cities, like the cost of real estate has gone up dramatically, but people's salaries haven't gone up anywhere near the same. So obviously it's debt that's kind of filling that gap.
Just another reminder that boomers have no idea how good they had it. Boomers.
Sorry, Mom and Dad.
Anti-boomer pod. They don't listen. They don't know how to get on YouTube, so it's fine.
True. That's true. I don't know. My mom's on Facebook a lot. So.
Well, that's...
Love you, Mom. Yeah,
never mind.
I love you, Mom. From Mitchie J, how much do you recommend saving from your earnings when you get your first job? Oh, okay. I guess we just sort of really talked about this. There's no one answer to this, right?
Yeah. Well, it's going to depend. Like if your first job is when you're, 15 and you're at home and you have no real like fixed expense, you should be saving as much as you can. Actually, you know what? That's probably the best answer for everybody. How much you should be saving is as much as you can. Like you should, whatever your situation allows, you should try to maximize it, because it's going to make you better off in the long run. There is one rule, or not rule, sorry, like a rule of thumb called the 50-20-30 rule. So again, I said rule again, I meant rule of thumb. That's it. So the idea is like 50% of your income, whatever your income, should go towards your more fixed expenses, housing, whether it's rent or mortgage, insurance, that kind of stuff, like the real essential expenses. 20% then goes towards savings. And then 30% left over for more discretionary, entertainment, travel, that kind of stuff.
I've heard this before too, but like I know so many people now that like easily they're spending more than 50% of their earnings
expenses.
just on housing.
Just on housing. So then if you go with that rule of thumb, then I would say, well, if you have to put more than 50%, that means you're taking away from that other 20-30. So you have to decide, am I taking away from the 20% of savings that I'm saving for my future self, or 30% of expenditures the fun stuff that I'm spending on my current self, right? Yeah. And
I get that. Cristine and I, not to personalize this too much, but when we got our first jobs ever around the same age, I think 15? We were like 15-ish. I worked at a Loblaws, at a grocery store.
Shoppers. I knew that.
Shoppers.
Her and Drake.
I've seen
the podcast. I'm a fan.
I came home smelling like milk every day from putting milk on shelves. But like we had completely different. You saved your money at a young age
because because I didn't have expenses to pay because my parents paid for my food in my house.
Sure,
and their house.
I guess mine did too. But my thinking was like, I don't need this money. Right. Everything I really need is taken care for me. So that was all fun money to me.
No,
Right.
you gotta save.
So Cristine came out of high school
loaded.
with,
I'm just kidding.
with an okay amount of money.
Yeah, I was smart with
whereas
my money, yeah.
I had a really good time, but didn't save like any of that money. And I feel like there's a healthy balance somewhere in between the two of us.
I think, yeah.
Because I had a great time. And sometimes when a young person's like suggesting to me like, oh, how should I save my money? Part of me wants to tell them like, you should enjoy yourself too a little bit, you know?
Balance.
Yeah.
Can I say what I did for my first job?
Tell us, yeah.
I worked at a go-kart track. Best summer job ever.
No
Best job
way.
ever, yeah. A couple years in high school.
What was the hourly rate? Do you remember?
Yeah, it was minimum wage, which when I was 16 was like $5.35 an hour.
$5.35. Wow.
Yeah.
But could you buy milk for a nickel or something back then? Or?
I wouldn't know.
You bought it from Ben?
Yeah.
You got it from the cow next door.
Yeah, that's right. That is. But I mean,
were you always saving your money when you were younger, or was it something you learned later?
okay, I'll admit I did. I was a saver.
Okay.
And so I was more like you that way, but I still lived. And the problem is I think what most people would say about me when I was young was I was a bit of a mooch. So I would like everybody'd go out for coffee or whatever, like whatever we did when we were teenagers, and like I'd be like, I don't want to, and they'd be like, fine, come, I'll pay for you, because I always acted like I had no money.
And I was the guy like
and so I needed friends like Ben who were like,
that.
oh yeah, come.
Well, this is more fun. We should just talk about Derek. What's the biggest thing you waste money on?
Currently, yeah. As a financial advisor, what do you waste your money on?
A go-kart.
A go-kart. No, anything volleyball related, pretty much.
Okay.
I do have a volleyball
You have
court.
a volleyball court.
I do have
at your
beach
house?
volleyball, a professional quality beach volleyball court in my backyard. So,
How much was that sand?
can I say for real? Like,
I mean, you don't have to.
I don't have to. So the sand. So it's 330 tons of sand.
From where? Like anywhere in particular?
I went to a few different quarries to find the better quality stuff. It has to be just right?
I don't know. There's a sand business
All
out
your
there.
fans are like, who is this guy? But
Invest in sand.
Invest in
is what
hay,
we-
yeah.
okay.
So it's 330 tons. So it's about like 18 dump truck loads, right?
No
So it's
way.
almost 2 feet deep.
The rain doesn't.
No, I
Go away.
built. There's proper drainage.
Does it depreciate over time, the
Good
value of the
question.
sand?
It's a good question. I will have to add over time because some will blow away and drain away, but it's only my second summer with it. So
Is there resale value in having a volleyball court?
I think if anything, it's probably the opposite. It probably
Because they got
devalues my
to
property.
get rid of the sand.
Because it had to be a very specific buyer that would be like, oh, great, a
Yeah.
professional beach volleyball court.
Amazing.
Yeah.
All right, moving on.
Okay.
From Juniper, what's the best thing to do with a small amount of money to profit off of it in the long term? So let's say I can only like pull 5-10% from a small paycheck. Like, I wonder if we want to invent a more specific scenario, but like, I guess the question speaks for itself. If I can only put a little bit of money somewhere, what do I do with it? Assume I have my emergency fund stuff covered.
That's a tough one to be answering without being too specific.
Okay.
For one, I think the most important thing would be less about like what to do with the money, but would be to find a way to continually to add to it. Because what's going to be more powerful than whatever investment you make is going to be like consistency of savings. I think that's probably the most important thing. It would very much depend then on your risk tolerance, and but the question asks if it's long term. So if you're long term and you have the risk tolerance to maybe put it into the stock market, something that's going to grow. If it's a smaller amount of money, you still want to diversify, which means like basically not putting all your eggs in one basket. Like I wouldn't recommend like buying one stock with it or two stock. Like you want to
Or some Bitcoin.
or some Bitcoin. Yeah. Yeah, don't do that. No,
I know you can't be too specific, but like I've talked with my brother on the pod about like index investing.
Yeah.
Where you literally just like buy.
You're buying the market.
So if like the TS, what's the American version?
S&P
the New York
500, S&P 500, NASDAQ,
So like
Dow
the
Jones,
500 biggest companies, you're just buying a tiny piece of those giant companies.
That's right.
Your performance of you having bought that fund will just track the overall stock market.
And who
That's
can
right.
do that? Anyone with a bank account? Like, you don't actually
No.
need a financial advisor?
You
or
wouldn't
do
need a financial advisor.
Okay.
You'd need you could do it with like a self-directed brokerage account, and there's plenty of access to that. The other thing now is there's been kind of a more and more of these what's called like a robo-advisor, which is kind of a hybrid between like an actual financial advisor and just kind of do it yourself. And so they have different kind of models. They figure out what your risk tolerance are, and then they automatically invest it in a basket of ETFs, which is
It's
a
like
nice way.
AI.
Yeah, there are
Are they
some,
taking your jobs away?
not me because I'm so good, but no,
You're better than the robots.
no. It's especially at kind of the early level when you're first getting into saving, where like, to be honest, unless you have a certain amount of capital to invest, you aren't going to necessarily have access to someone like me. So that makes me sound more important than I am. But I mean, it using somebody like a robo-advisor, it's actually a nice kind of bridge to that level of advice or level of access to kind of diversified, low-cost investments. So
I think we can be honest that, without being too specific, part of the benefit of having a financial advisor is when you have an amount of money where you need to be more strategic about like certain approaches to when you declare profits and like filing your taxes, or maybe your money's in a holding company. There's lots of issues, Rich. It's a good problem to have, but like it's people with more money in different things that I think, in my mind, that's why someone might need a financial advisor.
Yeah.
If you're just like, I can put some money in a TFSA and invest in index funds, I probably don't need to talk to someone about that.
Yeah, maybe especially not specifically about, like, especially if someone who their only value add is just, hey, you should buy this fund. Maybe if you're able to deal with like an actual financial planner, somebody that can help you with budgeting, cash flow, like, the bigger picture stuff, someone actually can help you kind of plan for retirement or plan for the bigger goals, buying homes. I mean, I looked at some of the other questions, lots of questions around like buying homes and first homes. So dealing with like, a qualified financial planner who adds more value than just, hey, buy this stock or buy this fund or whatever, I think is pretty important. But you're right. Like, especially once you get to kind of a certain level of wealth, you have a certain level of complexity. That's when, some of the tax planning and everything more, and plus you have access to a range of more investment options as well that, make sense. When you have more money, you need to diversify more and add different asset classes. So, yeah.
Gotcha. All right. From Ellie223XU, how much of an emergency fund should I have? Should this be in a savings account or can it be invested?
Yeah, I think, we kind of touched on this, but I think 3 to 6 months is kind of the general rule of thumb.
And you should basically keep it liquid.
Yeah,
Should be
like
very
cash.
liquid. Yeah, like even if you do, if your savings account offers you 0.001% and you can get a GIC locked away for 5 years that offers 1%, it's still not worth it because it's not much of an emergency fund if it's locked away, if it's not like liquid as they say. So I think a high interest savings account through your bank or through some financial institution makes sense.
Gotcha. Lucy Zian, how do I save money and enjoy life at the same time? We'll have a therapist on next week to answer that question. We've sort of touched on this already as well, organically. So it's no one can answer that question for you.
But you said it, balance. It's about balance. Yeah.
I do want to just touch on that though, because I do see a lot of people saying like, I want to save money and prepare for my future, but I also want to have something to reward myself because it's been a hard year, it's been a hard month, and they like to be able to purchase themselves. So I completely agree with that logic. I think it helps you take care of yourself and your needs, and if it's something, as simple as like a lipstick or a nail polish, those are kind of the examples I saw in the comments. But I guess it's also quantifying how many of those do you really need, and kind of setting yourself a limit in advance of making those purchases rather than getting the emails and you're like, oh my God, I have to have that, right? You have to set yourself an allowance of sorts for like, how many of these this year are you planning on buying? Do you think is fair for that you time, for that you product that like you really want, which I do feel like if it's within your realm of availability with your funds and your extra fund money, like you should be able to do that and not feel guilty. But just like setting a bar somewhere is something you could do.
100% agree. And so the key to that then would be having a budget, right? I think having a budget, if you know
Put much simpler.
That's right. But no, it's good because to be honest, in my career I've worked with, there's lots of obviously, people have a tough time saving and maybe living, YOLO, too much living for today. Sure. But I've seen it the opposite, right? Where they're so focused on the future. It's rare, but so focused on the future, saving so much that you're withholding, joy and living and stuff today, right? And that, hey, and
it's it's going to sound so out of touch. It's a good problem to have, but there must be people who come to the end of their careers with so much money in different sort of vehicles of like retirement plans and things where it's like, you're just going to have to take that out as income at some point, right?
And it's not, I don't want to say it's an awkward, but I've had that conversation before with clients and with people when you sit down and you do financial projections, which is a big part of financial planning, and saying, okay, you're going to retire at X date. If you keep going this way, and you're going to have this amount of money when you die, like, you can't say it with perfect certainty, but you're going to have too much. Do you want to die with $4 million? Like, no. So live a little now.
Put it in the coffin.
Yeah.
Just bury him with it.
Bury with it. Yeah.
Give it to my cats. From Jessier 1988. Do you have to have a degree in accounting or finance to work in it? Do you want to just touch on like what sort of careers, like for someone who's really interested in finance but doesn't have that background or is potentially looking for a career change, like what can you do in finance other than, I guess, what you do?
Well, I mean, there's lots. I mean, you could do finance deals at car dealerships. There's all sorts of different things, like even working more in a financial related field in the government or something like that. But I'd say to this, like, to become a financial advisor, even to be a good financial advisor, you don't necessarily need that hardcore kind of accounting or financial background in your original post-secondary education, because to be licensed, become a CFP professional or to be a chartered financial analyst or to whatever, you're going to need to take industry specific courses anyway. Like, so it's rare that you,
and stuff, right?
Right. Yeah.
Like to get the license.
That's it, to get the exams. And then to be registered with your, with your Securities Commission, if it's the SEC in the States or the OSC here in Ontario or wherever, you need to have different credentials that aren't offered with your finance degree or your accounting degree anyway.
And that's designed to protect the client, right? So that the client knows the qualifications of the financial advisor they hire.
And to be, when to be a good finance, like, it's more than just the dollars and cents kind of stuff too. It's, I think having a finance degree or accounting background provides good kind of, core knowledge that'll help in a lot of things. But there's also a lot of personal skills that come with it when you're working with people, because you don't just work with their kind of wallets and bank accounts. It's a lot of psychology with money and spending, and you can even see by some of the questions, it's more about how do I save, or
Are
how
you like a therapist too?
You can be. There's there's actually a kind of a separate arm of in the called financial therapy that was started by some
really?
That's so interesting. I feel like that's a fascinating field.
Yeah, actually, I kind of want to jump. There's a question later on, but there's this person who said, like, I'm super uncomfortable just even talking about money.
Okay.
And I think a lot of people feel that way even if they don't say it. So I don't know. Like, do you have any thoughts on that, or is there a way to make someone feel more comfortable? I know it's often brought up in the context of like with your coworkers. That's a good point too.
I think
with
that's
relationships. Relationships a big one, but also like it is in your interest as people who work for a company with a big boss to sort of know that you're all being sort of fairly compensated maybe. Yeah. And just having people feel like they can't talk honestly about money and compensation can hurt people a lot of the time too, right?
Yeah.
So these what do you say, financial therapists?
Financial therapists. Yeah, there's like the Financial Therapy Association. You can get credentialing in it, and it's pretty interesting stuff.
Huh.
Yeah. Okay. Because it brings it's financial health, mental health, physical health. It can all be kind of tied in. Yeah. But no, I mean, when it comes to talking about it, like, it is a bit of a taboo subject, it seems. But I think more of it just has to do with comfort. Mm-hmm. I mean, whether you're young and just starting out, like, they don't teach this stuff in schools like they should. And oftentimes, unless our parents, like, I was very fortunate because my parents were very kind of forward thinking with teaching me about money and stuff. So it's just always been something that I understood and, was a big part of my life growing up. But I don't think that's the case for everybody, right? Like,
for sure.
And so we don't like to talk about stuff we don't know and we're not comfortable with, and we don't want it. I think it's whether it's money, whether it's whatever, you might not want to talk about it because you're not comfortable. So I think the first step would just try to get a better understanding of it for yourself, whether it's, reading a book, checking out a podcast or whatever, and learning, and then it becomes something maybe you're more willing. I don't know, maybe it's like going to the gym. Like the first time you go to the gym, you're trying to learn to, you feel awkward, feel like everybody's checking you out, like, oh, am I using this machine right? Yeah. Whereas if you were, the more you do it, the more comfortable you get, I think you're okay with it, right?
No, that makes a lot of sense.
Yeah.
If it's the coworker issue, we kind of touched on this a while back with the nail blogger rates, when I was saying how I didn't know how much to charge, how much I was worth. And then I kind of spoke to my peers, and we created like a little group where we could talk to each other about sharing rates with what we were getting from companies or what we should charge. And that really helped. But it just took us like taking that step and reaching out and asking questions. So if you're in a workplace where all your salaries are private, which is very different than like in the government where it's literally posted on the internet and there's no real negotiating there. But like I would try and talk to your coworkers about it. Those maybe you have a more friendly relationship with, and just see where things are, because it might help everyone to be able to discuss that more. Mm-hmm.
Yeah,
your boss will hate it, but
I love the core point you made though. That just people aren't comfortable talking about what they feel like they're not intelligent about, right, or informed on. So
yeah, for sure.
I mean, and they've done study after study about the average financial literacy of people, and it's on average not that high. I mean, so again, if you're not comfortable, nobody wants to sound stupid in front of somebody else. And if I assume you know way more about money than I do, I don't want to bring it up.
I like sounding stupid in front of other people. I do it all the time. Every Taco Tuesday.
So wait, what?
You just need better notes.
This guy brought it. He's the first person to ever bring notes.
What don't they teach in school that would help?
I mean, almost anything. I mean, I know
anything.
Everything.
How to count.
Well, did you have any financial any exposure to any financial education whatsoever?
Honestly, no. Like I learned about RRSPs, which is like the retirement saving things, from some lady at my bank when I was picking up checks. And she was just like really kind.
Here's a brochure.
Nice. And she explained it to me, and she drew on a map like how long it would take to save $1 million, but how you could do it if you put $10 away every month. And she kind of drew me a map, and I was like, wow. And that was the first time I understood that logic of saving a lot of money over time with just a little bit of.
That's the thing about saving, is the sooner you start, the less you actually have to do.
I think I was like 18, and she was like, if you start now, you could have $1 million.
You put away like $25 a month when you're that young, and by the time you're 60 or whatever, depending on interest rates and stuff.
But when you're 18, you're not thinking about 60-year-old you.
Yeah.
Like, right?
But like interest rates.
True.
That maybe I was like, not paying attention, but I do not remember learning about that in school. I don't remember learning about mortgages, interest rates, credit card debt, none of that. Yeah. So I feel like those are fundamental things that
huge debt and credit's a big one, because I mean, I'm sure we all know somebody, or even ourselves, who
students,
you get your first credit card and you're like, oh, this is magic. Like I get to pay for a bunch of stuff with this and I don't actually need money. And then all of a sudden it's like 22% later of interest rate, and making your $10 minimum payment, your $500 in credit card debt is all of a sudden worth, a lot more.
The advice is to just get a second credit card
to pay off your first one. No,
it's really tragic. Credit card debt is one of like the grossest things that I don't know how it's legal that why are banks allowed to charge a 22%?
They take a lot of risk, right? I don't want to. I'm not advocating for banks. They make huge profits.
Sure.
Maybe it's good investment, bank stock. I don't know, but like they do make, but they also take a lot of risk, right? Okay. Because there's no, the only guarantee that they're going to pay you, that you're going to pay back, is that you promise them you'll pay them back, right? So they're taking a lot of risk, and in order for them to take that risk, so I'm not advocating for it necessarily, but at the same time, that's why, or at least that's why they're going to tell you why they have to.
I get that, but I could see some pretty reasonable regulations that bring that number down, but maybe that's just like the lefty in me.
And I agree. I think it makes sense. The argument they'll make, and again, I'm not advocating for any, but the argument they'll make is, fine, do that. They're just going to tighten up even more on who could they give access to do it, right?
But maybe that's not.
Well,
that's a double-edged sword.
It's like in mortgages where they have a stress test, which is essentially tightening up people who can get mortgages. So it's similar logic.
It is predatory, I think, to a degree. But even more so than that is the idea of like payday loans and stuff like those.
Yes.
Those are much more egregious than, and there's been studies and stuff, I've done some work in financial literacy stuff, and that's a big area of like research that they really need to, like the underserved when it comes to banking and stuff like that.
Pretty depressing seeing those places pop up, and they're serving a community that I guess can't get credit cards, right?
Yeah.
But it's, those are so just self-evidently predatory, right?
Yeah, that's right.
Gross. Okay, from Graceygram. What basic knowledge about finance should everyone learn in school? So I think
you're clairvoyant. That was like exactly your question.
It's almost like you've seen these questions already.
Was there anything else to add, like other than mortgage and interest rates, which is the obvious?
Budgeting. I think budgeting's yeah. But I also think like why not even start learning about investing too? Because investing
like,
too.
How do you do it? Where do you go?
Yeah,
I feel like those are basic questions.
Like what's the idea behind it? Like why invest? Okay, budget and save, but and investing tends to be, I think, more interesting part of it too. I mean,
well, it is because if you get to pick like which companies you invest in, or like who's a part of which portfolio stock thing that you select when you pick one of those big. What are they, EFTs? I don't even know.
Actually, you just triggered a memory. The closest thing I came to learn anything about...
That's
the difference.
I just came back to me. In the 8th grade, we had a mock like stock market day where like we dressed up and they had
dressed
like
up as
fake... Well, like as if we were like businessmen or something.
With like a tie.
Awesome. Yeah, and I guess they had like... There must have had like fake data or fake companies, but like it almost felt like we were at a casino or something as a bunch of 12-year-olds.
Oh, you were like gambling.
So there is a way of making learning about stocks fun, even for a pretty young crowd. But I guess there is a fine line between that and making it seem like it is gambling.
Like a game.
Yeah. Because there's a big difference between like trading short term and actually investing. Like buying a company you think is going to grow for the long term, you want the dividends from it or whatever.
Gotcha.
But there is a fine line there. I also think, it's schools, but I also think it's something that should be brought up more at home. Again, I think if parents are more financially literate themselves, they're more likely to kind of share that knowledge with kids. But like for me, I with my kids, like I try to get them interested. I heard this from somebody else, but I actually bought stock in a company that they know, and so Disney. So I bought shares in Disney and then, held them, but I told them like, I bought this for you. And when you turn 18, you're going to get these shares. Okay. And so, and anytime we're at like Walmart or when we go watch Frozen or whatever, I'm like, you're actually getting some profit from that now, right? Like you have a fractional share ownership of Disney. So anytime you see a friend with a Frozen backpack, high five them because they're helping pay your dividends, and when you're 18,
that's smart. I like that.
I've never heard that before. I do just want to touch on the budgeting piece you brought up before. If there's like one thing they did teach people at a younger age, students or kids, it made a night and day difference for me. Like, I don't do this all the time. I'm not going to pretend I do, but writing down what you spend money on. Yeah. Most people do not do this, and it's incredibly eye-opening just to look back at what you spend money on month to month.
Some banks or like their mobile apps are doing this automatically now, or they're trying to help you. Sometimes it's not perfect, like house expenses aren't actually accurate. But like I noticed that one day I just look in my account and they're already charging it, and it's just like a feature of the bank now.
I know my bank showed me how much I spent on sand this year.
Unreal.
That's a category?
I'm
surprised
charts.
That's even a category.
For me, it's food, and like we're in a very privileged position.
We're the same way. Yeah.
So like I'm okay with it, but if I was living on more of a budget, that would be the obvious takeaway I would have from seeing
you did this growing up, right? And you self-admittedly spent too much money on takeout all the time, right? When you were
for sure. I used to have like takeout like every night.
Day.
There's lots of people have done blogs and articles on stuff showing like how much if you spend X amount on like a coffee a day, or if you just cut out one a week or whatever, you're spending really over the time. Like how thousands.
Someone added up how much Ben spent on my tea just by like looking at how many Starbucks cups. Someone did that one time, and I was like, "Thanks, guys, for calling me out." But like, it is true. Like, if you are someone who consumes,
I did not write that off as a business expense. But
if you are someone who consumes specialty beverages, then you add them all up, and it could be like over $1,000 a year. You'd be shocked how much it adds up.
If you cut out one of those, like, I mean, there was the question, like the balance between like living life and being financially secure. maybe cut out half, or you can find space. It doesn't have to be all or nothing. Like,
Yeah. You could start trying to make them at home or something.
Yeah.
Actually, yeah, maybe like if there's some unconventional financial advice you leave with, it's, learn how to cook. I've never really thought of that as financial advice. But you know what I mean? Like when I think back to how many thousands of dollars I wasted ordering,
Subway.
Greek on wheels every night for a year. I like to think I could have all that money in my pocket if I just learned how to like boil a pot of water and, or like make a salad or something.
You know what's worse than cooking? It's making kids lunches.
Make your kids cook.
Yeah, that's right.
Make them cook their own lunch.
Yeah.
Kids, why that's
How
a
expensive
terrible
are kids?
financial
Isn't it a good
decision, right?
Well,
What's the ROI on children?
Yeah. Do they pay dividends?
We're not the right people to be having this conversation.
Can I get them into YouTube,
Acting?
maybe? Or
Get them into YouTube.
Any advice?
Yeah, start that kids channel.
yeah.
The advice is no, don't put your kids, don't exploit your children for money. That's the advice.
That's Christine's YouTube advice.
Okay.
From Math Pie Hannon, how important is it to save for retirement, and how can anyone save for retirement without a 401k option through an employer?
Good question. I'd say on a scale of 1 to 10 of how important, probably like a 10. I mean, because unless you don't want to retire.
Saving for retirement on your own, or having
especially if you don't have
some sort
of a
through
retirement plan. Yeah.
So when they say 401k, is that the equivalent of a pension?
That'd be the equivalent of a pension, like a defined contribution pension plan in Canada. Very different from a defined benefit plan like you would know through the government, where your employer and you put in and then you're guaranteed like a certain income. 401k is more like where they put in money, you put in money, likely, or you might match, might not, but you have a big pool of money at the end when you retire, and then that sustains you. So it's much like a defined contribution pension plan in Canada.
So I think the question is saying that a lot of people don't have 401ks or whatever equivalent.
Their responsibility.
It's their responsibility. So then it's extremely important, because each whether you're in the States and they have Social Security, I don't know a ton about Social Security, but that's kind of meant for to at least provide a minimal level of, and it's very similar here. We have Canada Pension, the CPP, and we have the old age security, but those on their own typically aren't enough because the whole idea of retirement is you want to at least have a certain level of your standard of living that you've enjoyed throughout life. And so if you actually want to retire, you need to save for it. And so using, we have RSPs in Canada, there's IRAs and Roth IRAs and stuff in the States and wherever you are. But yeah, it's extremely important to save for retirement.
Yeah. It is really sad to think that people can, get to the end of their career, let's say it's 65.
Not have done that.
Yeah.
And that's something you kind of have to do on your own, right?
Yeah.
Like you have to physically go to your bank and choose to set that up.
Yeah.
You can't just...
You could do it on
You
your
could
phone.
do it.
Or I guess you do it online.
Yeah, you could do it as self-directed. You could do it through like a robo-advisor. There's multiple ways of doing it. It's more important that you do it, I think. And then, again...
And the sooner you do it,
the sooner you
do.
Do
most banks offer like free advice on how to set those things up?
Or even they kind of account you need to do this, right?
I don't know.
Yeah. I mean, and you'll be dealing likely with somebody who is at least to some level accredited to be able to provide that advice. And again, not talking about banks. I've worked in the banks, and they can do good things, but you have to keep in mind, like if you go to a bank, they're going to recommend a bank product.
Yes.
Right.
So there is a bit of a conflict. If you go to somebody independent, who might have, might have more kind of, and that goes, like, if you're thinking about working with a financial advisor or a financial planner, investment advisor, so many different titles, one of the biggest things you need to ask is, how do you get paid?
Okay.
Because the compensation is very different depending on, whether it's commission or, am I only offering products available through this company or whatever. So very important questions to ask too.
Yeah, good point.
Yeah.
I remember we've talked about this when we walked into a bank when we were younger and first starting to get a meaningful amount of money. It was very obvious that they were just trying to sell us mutual funds of that bank.
Yeah.
And it was just super transparent and gross. Yeah.
Yeah. And I mean, whether that's right for you or wrong, it needs to be acknowledged that that's what they're offering, because
they have an incentive.
They have an incentive off of that, right?
Yeah.
And that doesn't necessarily, it's like It's like going to buy a car. If you go to a Chevy dealer, that's all they're going to sell you is a Chevy. So if you want a Chevy, that's great, right? Is Chevrolet even a thing still? Yeah, or a Ford or Tesla, whatever. If that's where you go, that's what they're going to try to sell you.
I think that's a great point, though, because if you go to a car dealership, you know what brand you're looking at because you've already made that choice. But if you go to a bank and they suggest certain portfolios, it's not obvious to you because you're not an expert in this that all of that is directly an interest to that bank, where there could be other things that make more sense for you.
Yeah, and I don't think we're going to endorse any sort of third party service.
No,
but these things exist now.
Yeah.
You can.
Are they more expensive?
What should someone Google if because what are they really called? These sort of
robo advisors is kind of the more common term.
Is that the term used for them?
How do they get paid generally? I know you don't know. It could be different, but is it just a commission? Is it
no? It's not a commission.
Rate,
each one's a little bit different, but basically you pay a percentage of what your overall assets are, and a lot of them have some of them are actually more subscription based, like you pay X amount.
So it's not performance based.
It's not performance based, and it's not based on either, because that's the other problem, right? Because part of the industry still is very based on commission, and so it's very much what you buy. In Canada, at least, the regulations are starting to catch up, and there's more transparency over what those commissions and how advisors do get paid. But yeah, no, those robo advice, it tends to be more fee based. If you have $1,000, you pay whatever 1% is your fee or whatever up to
even if you
amount.
end up losing money.
Yeah,
you're still paying.
Yeah.
I mean, to be fair, they are still doing the work.
That's right. Yeah, that's right. And I mean, if you're losing money, often it's with investing, especially in the markets, it's up and down. You can't really say, well, one year I won, 1 year I lost. It's longer term is when you'd want to really measure your success with an advisor.
And that's why it's important that this is money that is for the long term. It's 100%. Not something you should be ready to take back next year.
Yeah,
right?
if you think
the point is,
if I'm buying a house and I need that money next year,
don't put it in,
right? I mean, you should. The kind of general, I think, guideline is you should have at least a 5-year time horizon before you even think about putting part of that money into the markets, right?
Okay.
That's good to know.
Interesting. And these vehicles you should be using to invest for the first time. So in Canada, we have TFSAs and RRSPs, right?
Yeah.
RRSPs are designed, they're made in a way where you are penalized for taking that money out before your retirement age.
Right.
And I guess just the obvious advice that I just feel should be said is you maximize your use of those vehicles before you start investing in, non-registered
absolutely.
plans.
Yeah.
Is there a U.S. equivalent to a tax-free savings account?
The Roth IRA, I believe, again, I'm not licensed in the States, I'm not as familiar, but from what I understand, the Roth IRA is very similar to a TFSA.
Okay.
In the fact that you don't get a deduction for the money you put into it, but anything that's earned within it is earned tax-free. And I think it's the limits and how much you're allowed to put in, that kind of stuff might be a little bit different.
Gotcha.
Yeah. And then the IRA is much more like RRSPs, where if you put it in, you get a deduction of your income, which reduces your current taxes, and then it grows and they're tax deferred until you pull it out down the road.
So it's just a question of when you will pay tax on it, right?
And I mean, that's the one thing where dealing with a financial planner or somebody at credit, because if you have, I do my budget and I have $500 a month that I know I could put towards savings, and do I, what different vehicles should I be, should I be putting some into an RSP, some into TFSA, or should I put in a lot of that'll depend on where, what's your tax rate? What's your marginal tax rate? What's my income? Because putting it into an RSP and getting a tax deduction, if your income is really low, it doesn't make sense. You're probably better maybe to put it into the tax-free savings account. Gotcha. Wait till you're, especially if you're early in your career and your earnings aren't quite at the highest, you're better to maybe depending on your situation, wait until you're a bit, more senior, your income's up, and then you can use that deduction room later when your income's higher. Okay. So that is where dealing with a professional, if you can, they can help you with those decisions. I think some robo advisors have advisors you can still work with, and it's pretty handy to be able to do that if it's through chat
without making some big commitment of handing all your money over to them, right?
Or putting in a super high fee mutual fund or something along those lines. So
okay,
all
right, let's bang out a few more. From Helena, why are tax forms so complicated? Wouldn't the government benefit more by making tax forms better and friendly to the layperson?
Justin.
I know you're not an accountant.
Justin, are you listening?
I mean, we don't file it. You're not an accountant. We use an accountant.
But I see all the forms that my accountant gives me to sign, and they are incredibly confusing and sometimes require hours of explaining to me so I understand what the heck they are. And that is because of our more complicated picture, as Ben was saying earlier. That's just what happens.
I'm not sure if the assumption of the question is that the government would benefit because like more people would pay their taxes if the forms are simple. But I think the obvious cynical take on this is a lot of people's livelihoods and careers depend on people not being able to file their own taxes.
Yeah.
Is that a fair criticism to some degree? Like, do you think tax codes are unnecessarily complicated in 2021? Am I boxing you into
No.
That's kind of my opinion.
Yeah, they are complex. There's no question. And actually, my opinion, I've worked in both on the Canadian side, and if we think our tax code is complex, like the US side of it's even more, the filing requirements and stuff, it can be even more daunting there. But I think whether it's unnecessary, I mean, I think, yes, it's easy to say everybody would benefit from it being less complex. It'd be easier. People maybe would be more inclined to do it themselves. Mind you, I mean, there's been such advancements in like TurboTax and those kind of online things that unless you have, maybe business income or something more complex, simple cases can be done. I mean, even though the forms are complex, if you're doing it online through a service.
I use those services for a long time.
Yeah. I mean, and they work well. So, but I think why tax code and why tax forms, everything is so complex is because it wasn't all created at once, right? I mean, if you look 50 years ago, 100 years ago, like, everything's been kind of added, new legislation's passed and it's added. And it's like, if you're creating a computer program, you're not starting from scratch every time. If you keep adding things to it, then you end up with this kind of cluster.
And like they're trying to patch loopholes,
they are,
right?
Yeah.
But it's just turning it into this monster.
It's like a computer that needs to be defragmented.
Yeah.
Yeah, but like now with an Apple, I don't even think about defragging my computer anymore.
So where is the Apple of tax forms in 2021?
I think what it is, and I know there's actually been commissions and studies in the US on like how to simplify tax code. It's probably super interesting for all your listeners, but
one person,
yeah. Please make a comment. I mean, one nice comment about my view on tax codes, but you'd have to completely start from scratch. Like that's really what the decision was, is like, you can't just kind of like clean it up because there's so many iterations, so many additions. You can't just be like, oh, if we fix this and fix this, it'll be easier. It's like, no, you literally have to throw it out and completely start everything from scratch, which would cost a ton of money and take a lot of time. So.
And be complicated just to onboard everyone onto the new system.
And then nobody would be happy with.
But I guess we all agree that we need like a socialist revolution to. Is that what you're saying?
Just rip all the papers up. No. Okay. Next.
All right. From Ms. Redhead Rapunzel, what's a bogus financial tip you hear all the time that you want to stomp into the ground?
I like that question. Nothing. I won't say anything specific, but I will say there's a lot of like anything get rich quick. There's tons of, I see all these, videos and stuff where it's, the guy's making it rain and all you need to do is, and like everything, right? Like, you just follow this strategy, we'll teach you how to trade options or buy this,
buy my book.
Yeah, buy my
follow
book.
my 3 simple steps.
$9.99 a month and we'll be guaranteed like.
Yeah. I get those ads.
Yeah, I mean, that stuff drives me crazy because you think like, well, I mean, if it's too good to be true, probably is. Number two, like if I created a foolproof system that could guarantee to make you money, would I sell you a subscription for $9.99, or would I just go to the Bahamas and use that system and make myself a ton of money? Like, like what? Like,
you wouldn't want to just share it with the masses?
Yeah,
for
like
free?
out of the goodness of my heart, I mean, for a low monthly price.
That's
like,
a good point.
Those types of things just
those channels drive me nuts.
Too. Yeah, because and I've always felt like you get rich slowly. Like that's really how it's done for most of us anyway, right? So I'd say that's
I like that model.
Yeah,
that's like more aspirational. It's realistic. Get rich slowly.
Get rich slowly.
Yeah,
I like that.
Get a tattoo of that. I like that.
Get rich slowly.
All right, and last question from Glittery Cucumber. Do you have any recommendations for books, podcasts, websites, etc., to learn about finances and investments? I always feel like a dumbass trying to educate myself. So any tips on learning the basics?
Yeah, there's tons out there that are good. I actually wrote it down in my notes. I can't remember what it's called, but there's one. Yeah, there's one called One Page Financial Plan. That's really good.
Is this a website?
No, it's a book.
Oh, okay.
Is it one page?
No, that would be awesome if it was, but it's not.
Just the writing's really small.
The nice thing is I think it's really good for especially just getting into it, like, really simplifying things. So it talks a lot about like where to get started and stuff like that. So that's pretty good. There's I don't know if you've heard of it. It was a Canadian book. It was written decades ago, but The Wealthy Barber. Harder to come by, but it's a very good book. You might find if you read it now, like some of the references, because they'll be talking about the savings account and GICs you can get for 5, 6, 7%. Right. But just kind of like the basics of like saving and just smart consumer behavior, that kind of stuff. And it's a good read too. Like it's done kind of in a storytelling way. Harder and harder to come by copies of it, but if you can, it's a really good book.
Are there free resources that people can refer to?
Oh yeah, there's so many.
Not that those books, like you could go to a library and get that book, I suppose. But
yeah, for sure. There's tons of good blogs out there. YouTube. I'm trying to think if there's any.
Shut up. I used to go to Canadian Couch Potato.
Yeah, that's I was gonna say. Yeah, and they're very good if you're looking for, especially if you're really into kind of like index investing and really low cost stuff. They have model portfolios you can follow. They have good tax advice, but there's tons. I'm just trying to think of another one that was good. Retire Happy, I think, was one. It's a Canadian one that has some good content. And there is a good YouTube channel. Okay. I have to say, like, it is a colleague of mine. He has a YouTube channel called The Plain Bagel that I think is pretty good. He I think is good because it's very objective. Talks about kind of more of the basic stuff. Sure. And I know he mentioned why he actually started it when he was in university still, because he was getting tons of questions from people about like just the basics of investing, basics of personal finance stuff. So that's why he started, and it's done pretty well.
And as with any advice you get from YouTube, I suggest you look at a few different channels, because there's so much information out there on YouTube, and it's hard to like figure out who is a reliable source.
Oh, for sure. Yeah.
And always question the motivations of the people 100%. Telling you the information.
Yeah, like
that's probably the best advice.
If the title is 10 ways to make money fast at home, I'd be a little skeptical.
Yeah. How to get 6-pack abs in
2 weeks. Yeah. Also that.
It's basically the same thing.
I've been waiting for 40 years. But no. So I think that's great advice, because, anytime somebody's like, you should do this, or this will work for you, they can't say, they don't know you. Everybody's situation is completely different. Any kind of good blogs, any good advice, any good books will be saying, hey, these are the types of things that can work, and they'll give you kind of more general advice, and then they'll give you different options, and then let you kind of go from there. But anybody because there's no one size fits all solution out there at all, I don't think. So anybody,
That's just the clickbait.
That is the clickbait.
Clickbait.
Yeah.
Financial clickbait.
Yeah.
I feel like we can go on a long time and maybe even do this again sometime.
This is really interesting because it's knowledge that Ben and I can't offer because we don't know. I saved my money as a teenager. Like, that's all the help I have. But I think it was really interesting.
These are good financial role models.
Well,
Come on, Simply.
Yeah.
Sure, but we really appreciate you coming on and kind of using your expertise and sharing that. So thank you for coming.
I enjoyed it.
Hope you enjoyed yourself.
It was fun.
We're going to reward you with tacos now.
On Taco Tuesday.
On Taco Tuesday, we're eating tacos.
Is it a business expense, Ben?
I'm not going to answer that on camera. Probably. In Canada, meals and entertainment, you can only claim 50% of anyway.
Yeah.
So
you get half the tacos.
You can only. I'm only ordering half the tacos I would have otherwise.
I just get the
shell.
Okay.
Just the shell.
A lot of carbs.
Okay. Let's wrap it up. Thank you so much, though. That was. I hope that was helpful. I hope that was interesting. I hope you enjoyed that. And
only
I hope
say nice things. Comments.
Yeah,
very
sensitive.
sensitive.
Leave
Be very nice in the comments.
Let us know what you learned.
And if you want me back, I'd come back.
Yeah. Or if you have questions about volleyball.
Yes, and sand.
If you want to acquire some sand.
Maybe you could come out, do a video, and I could show you my tractor, my rototiller that I used to.
I can't play volleyball. Look at my nails.
Yeah.
It's true, but you can watch.
Terrible. It's not a good fit.
Ben is a,
Band?
Ben is a what?
excellent. He was a volleyball player.
I used to play volleyball
Used to
back
play
in
volleyball.
high school. That was a while ago.
Yeah.
Yeah.
Just a few years.
Just
A few years ago.
all right. Let's wrap this up.
Yeah,
Thank you guys so much for watching.
And we'll see
We'll see y'all later.
Bye.